Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? Hello, hello, hello. All right, ladies and gentlemen. So this is going to be a pretty complex video, right? So there's going to be a lot of stuff here. What's going on, B-Rod Cooley? CLOV to retire. What's going on, B-Rob? Oh, it's past my bedtime. Oh, I'm so sorry. Smash that like button, right? Let's go. I keep hitting that 116,000 today. Let's go. Up all night with Al. Let's do it. Volume 11. Yes, the Messiah has blessed us with his presence. That's just so funny. Hello, hello, hello. Oh, what's up, Felix? Looking dapper, Al. Appreciate you. Look like the Godfather, my friend. Oh, that's a good one. I like that. I need to get a pinky ring, right? You know, you see how you saw Trump today? He's like, hey, you, mister. That was pretty crazy, man. What the hell's going on? Really, it turned into the show The Apprentice, right? Back door, it should have been behind closed doors. But Al, you're building an empire and power. Yeah, hell yeah, right? Powered by God. That's what I'm talking about, right? What's going on? Buying the company, not the stock. Absolutely. Hello, hello. Let's go. And Al, we trust. What's going on? Follow. Who is selling the AST stocks, right? Oh, man, honestly, right? People are going to start trading mastering memberships now because they know where it's going, right? It's going to the moon. Nice gift today. Had to buy the dip. Absolutely. That's the mentality that, people have, successful people have, right? CLOV, what's going on, CLOV? People, we got some cheap ones today. All right. So in this video, we're going to go ahead and discuss a couple things. We're just going to go ahead and do a little quick synopsis. We're going to go ahead and talk about Clover, Palantir, Humana, Alignment Healthcare. We're going to do our analysis regarding what's going on in the market. Is the market bottoming? We're going to talk about treasury yields because treasury yields are falling. We're going to talk about the AA2 bull ratio. Look at how many bulls there are now. You see, the bulls have gone away. Bulls have gone away, ladies and gentlemen. Last time it was this low, it was the bear market of 2022. So could this be a market overreaction or could this be something else? Look at the bears. People are saying the market's too frothy, the market's too this, the market's too that. Look at how many bears there are now. Last time there was this much bear, it was a buy the dip opportunity, right? We're going to go ahead and talk about Clover earnings. Last year, we went ahead and did a projection on Clover Health CLOV stock 2024 price target. Ladies and gentlemen, we did the projection and we said anywhere from an intrinsic value of $2 all the way to $3 to $3.50. We hit it right on the knob and we used a depreciating revenue from 2023 to 2024, and our price target was actually lower than what the market has given us, which is impressive, right? So with that, it shows you the power of our intrinsic value. In fact, if I may, I'm going to go ahead and I'm just going to stop the sharing of the screen because I'm going to go ahead and share the audio version of the screen here real quick. And more specifically, I'm just going to hit it at the end because I specifically say something I say in the end, we're going to get, and this was the bearish scenario. I put Clover at 41 million of free cash flow, which obviously we were at 80 million, and I put it with a 1% growth rate, which is we were actually a 9% growth rate, right? But I want you to listen to what I said here because now people are starting to realize that what I'm saying is not bullshit because I align myself with billionaires, right? I align myself with how billionaires invest, which is intrinsic value calculation, right? So let's go ahead and do this, right? Listen to this that we have. Overall, it's a privilege and honor to speak with each and every one of you. In the meantime, as Clover works hard, focus on yourself, focus on your mind, body, spirit, and motion, work out, lose some weight, and let your money work for you. It's a privilege, and I'll see you on the next one. Now, I thought I said something else. Let me see. Interested in watching. Wait a minute. Obviously, I need to look at the transcripts. So let's look at the transcripts real quick. Oh my God. Let's see. Look at this. Here it is at 20 minutes. 20 minutes. All right, we're here. So this is actually good. I'm happy that we went ahead and did this because look, when we were talking about this, Clover was 77 cents. Clover was 77 cents. And this was on March 13, 2024. 77 cents. We were doing our price target, right? 77 cents. Okay, so let's go ahead and do this. Price targets I have here. because these are survival price targets. I do believe there'll be a day where we're going to look at this and we're going to say, holy moly. And hopefully by then, for all the people that are watching, you'll see the power of this intrinsic value calculation. And that's it, guys. Yep, that's all I have for you. And now I hope that you're starting to see the power of the intrinsic value calculation. You're starting to see from that stock price of 77 cents till now, we're up more than 500% on average. So now you're starting to see that what I've been teaching and what I've been preaching actually has statistical significance. And it's what billionaires are doing, right? But now you have access to this. Okay. All right. So, oh, yeah. Man, how I missed those 77 cents days. Let's go. Right. Okay. So let's go ahead and remove the screen of that. And let's go ahead and share the normal screen, shall we? So this was a video I made last year, pretty much 11 months ago, right? And we were giving our projections. So we're going to give our projections for this video. So stay tuned for that. Very quickly, I want to make sure. Oh, yeah. We'll do our analysis. But before we do that, let's go ahead and let's talk about CLOV. So CLOV that today was down 4.11 cents. We went ahead, started it really low, and then went up 10% on the day, up to $4, and basically trickled back down. 5 days, we're down 10.79%. 1 month, we're down 9.57%. Year to date, we're still up 26.84%. 6 months, we're up 58%. A year, we're up 361%. Okay. Now for Palantir is up to, pretty much break even today. It's down 11%, almost 12%, right? And year to date is still up 12.92%. So we pretty much basically got a haircut, right? If you want to call it that. There is a rebound on Humana. Year to date, it's up 7%. Alignment Healthcare, interesting. Year to date is actually higher now than Clover, 35%, right? So it's interesting because, Clover and Alignment are both tracking along, but Alignment has more institutional ownership, about 92%. Clover only has around, let's say, approximately 20, right? So obviously, this is clearly, you're going to start seeing here, ladies and gentlemen, is you're going to see the stock price. This guy's like, I missed the 450 days. I love it. What you're going to start seeing now is a stock price dip really hard, and then retail investors are let's say a 1% of them sell. That's enough for institutions to come in and gobble that. And then they went from 20% to 21%. Then in the next couple of weeks, it drops again really hard. And then maybe 2% sell. So then they're going to go from 21% to 23%. And what's going to end up happening is institutions are going to continuously go higher and higher and higher. Okay. So we went ahead and talked about that. Okay. So here's what it is. This is the AA2 bull ratio. So obviously if it's low, it means that there are more bears than there are bulls. If it's high, it means there are more bulls than there are bears. Right now, we're at the lowest we've seen since 2022, that bear market where Palantir was at $6.50, where Meta was at $90, where Clover was at literally 60 cents, right? So this is actually really crucial, guys, because so it has to do with the tariffs, China, increasing tariffs on China, potential government shutdown, maybe. So many different types of things are basically circulating in the market. And the last time, again, I'm a very data-driven person. The last time we're actually this low, and if we were to calculate all the times where the AA2 bull ratio was this low, it was and if you were to track the 1 week, 3 week, 1 month, 6 months, and 12 months progression, you are essentially look, this was COVID. So this little dip here, this 2020 right there, that little dip there, right, that little dip, right? You see how it was low, just like this. Every time that you got it to this trigger, and this literally went below the trigger, you smart money starts to buy. So you want to ask yourself, are you a buyer of this fear or are you a seller? Sorry, essentially what I'm asking you is, are you dumb or are you smart, right? And these are not my words. These are the words of how Wall Street labels retail investors. And I'm just trying to show you the reality of things, right? Okay. This just looks at bears. Dude, bears literally shot to the moon, man. The last time we're at this level, I mean, it's really high. Like we're talking 2022, 2023 levels. Could this be the start of a recession? Now, let's talk about this. It's very hard for someone to predict a recession. If someone tells you, "Oh, I know how to predict recessions," they're lying to you. They're lying to you, right? So, um, however, we can look at the risk of a recession. You know, if these government jobs Doge, right? If people continue getting doged, right? There's a new term called Doge. I got doged. It's crazy what like new verbs and actions and nouns, people create over the years. But the problem is this could lead to a recession, right? But they obviously are smart to know this. And what they're doing is they're putting pressure on the Federal Reserve. If you go ahead and look at the federal, the amount of rate cuts expectations, we actually went from 0 to like 2, and we're almost like halfway point between 2 and 3 rate cuts. So I think that the market is expecting a rate cut soon, and that's actually pretty good because if that happens, a rate cut is actually stimulatory for the stock market. So that's what we're waiting for, I think. And I think the market, so now that I said that, so we have a rate cut on the horizon. Even though in late 2024, people were prophesizing that there will be no rate cuts in 2025, and I said, wait a minute, just wait, let the market smother and marinate into time, and you're going to see that, right? And I think we are going to get a rate cut. So there's that. We have to, right? I mean, this is, the jobs report came really weak. A lot of people, unemployment came pretty high, right? People losing their jobs due to the, getting doged. And my apologies for all the people. We've actually had some people impacted within our platform. It sucks, right? So I really, my humblest apologies to all of you guys for that. But I hope that, this platform serves as a way to break you out of the matrix, just like how it has helped me break out of the matrix. I am my own man now. I am my own person. I am my own man. I choose to have a boss, right? Because I love to serve, right? I love medicine, but I'm at a position now that the only person I have to answer to is the man upstairs. That's it, right? And I want you to have that opportunity too, right? So with that, in regards to looking at this bears, or the last time, actually let's just move here, the bull ratio. So if it's high, that means bulls are taking over. It's low, bears are taking over. If you were to calculate every time we hit this low, we should expect double-digit returns for the S&P 500. So I'm expecting double-digit returns this year. I know that looks crazy, but I know, just like how it looked crazy when Clover was at 70 cents and I was banging the table telling you, 60 cents. I was like, oh my God, this is like a big buy. People were looking at me like, I'm crazy. This is I love when there's fear, right? I feed off of fear, right? It's going to sound toxic, right? But I feed off of negative energy. I love when people talk crap to me, because I take their energy and I focus it on build. Like, for example, people were talking crap about our platform. People were saying, oh, what is this? The people were saying, oh, what is this Excel looking spreadsheet? And I'm looking at them. I'm like, I understand how complicated that how many equations are in there. And now look at our software, right? I put my head down and I worked, because I was working tirelessly hard for people that were believing in our lifetime access platform. And this is the result of everything we created. This is the result. This is the hard work of everything we've done. Right. So, I love when there's blood on the street. I love when there's naysayers. I feed off of that energy. I love that energy. I use that energy. Okay. All right. And you should too, right? Compliments are nice, but sometimes a good slap in the face is nice, right? Okay, so that sounds really toxic, doesn't it? Right? That's terrible, right? Maybe that's why I'm going into surgery. I just love it, right? Yeah. All right. Okay, I'm crazy, right? What do you expect, right? What do you expect? Okay, so you think I'm gonna be a chill dude, right? I'm gonna have 5 degrees. I'm not gonna be chill. All right, so let's go ahead now. We went and talked about this, so now let's go ahead and do our analysis for Clover Health. So yesterday, I'm gonna give a shout out to one of our members. our members reached out to me personally, and I'm going to share this these messages. There's not anything personal in here. It's just he reached out and he said, "Great video today, a breakdown of this. I've been thinking a lot, and I want to be a little bit more conservative." And we were walking together, and this was at 6:47 p.m. He sent me this. I sent him a message at 11:21 p.m. and I said, I like what you're doing. I like this a lot. So we went ahead and we went back and forth, and we came to a better price target, right? So again, I love my lifetime members because it's funny because once you empower people and you give them the right software and the right things, magic happens, right? So okay, so let's together as a team walk through what we talked about. Okay, so we understood that BER was going to go from here. Hold on, let me load it up. As I do that, smash the like button as I figure this out. Smashing the like button actually helps with the YouTube algorithm. It helps with that. It helps spread things. Also, follow us on LinkedIn. I need 150 to be able to stream on that one. These are all things that really help the channel, and it's free. I mean, you know what I mean? It's free, right? Okay. So if you look at here, guys, the insurance, this is for 2024. The insurance BER is 81%, around that, right? And then the MCR is 75%. They're expecting now the insurance BER to be 87 to 88%. Now, if you go ahead and look at the BER here and MCR, there's like a 6% difference. So if you just take like 6% subtracted from this number, you get around 80 to 81% of MCR. So it's still industry leading. It's not like it's not industry leading. So I'm actually really excited for that. And you got a plus 30% growth rate. So we could even get more switchers. Who knows, right? But this is actually but the thing is, we can't be too happy, right? We got to be conservative, right? And if we get more than what God gives us, then great, right? So let's go ahead and let me talk to you about what I spoke to one of my lifetime members yesterday, okay, and also today as well. So he said, Al, I like the free cash flow, but just like these new members are coming in, what happens if they don't contribute to free cash flow? What happens if there's a 30% reduction in free cash flow? Can we just take, 30% reduction of the 5.9%? So if you take 30% off of 5.9%, which is what we calculated, which goes from revenue to free cash flow. If you don't know what this means, you should watch the video of the earnings report in my analysis. But essentially, all I did is I just took the free cash flow and divided it by revenue to essentially give me the 5.9%, which is the amount of money that goes into free cash flow. But he was saying, he said, Al, we're getting new members. They could be unprofitable. Could it be that maybe we should maybe just take 30% off of the that 5.9%, and it'll be like 4.013% or something like that, or 4.13%, around 4%, right? And I was like, that's great. I love that. I do that all the time, but I was like, let's dig deeper. Okay. So I said, let's do one step further. How about this? Let's say the 1.37 billion that we made this year, the free cash flow that comes from that stays as 5.9%. But the additional revenue we're going to make to get us to 1.8 billion, 1.87 billion, let's subtract that out. I think that's an additional 400 million. And let's make that 4% of free cash flow. So then we can add those free cash flows together. But then I thought to myself, I said, okay, fine. We'll go ahead and we'll take a 30% reduction off of that. But we'll go ahead actually, and let's just say the new members don't generate free cash flow. So I said, let's just screw those free cash flows. And let's just go ahead and focus on 5.9% of 2024's revenue and just get that same free cash flow and just use that for 2025. And then we could do another step further. We can divide it by 2. So we can assume that assumed to be unprofitable folks that come in, instead of getting 80 million of free cash flow, which is what we got in 2024, we could say we're going to get 40 million. But we're going to have a growth rate of 37%. And we're going to see what the price could be with that. You see what I'm saying? Again, I'm just trying to be conservative, right? But then we have another argument that the lifetime member raised. He said, well, we did have that $39 million payment to ACO. we're not really going to have that $39 million in payment to ACO in 2025. So that could potentially add 39 million back to the 80 million that we have of free cash flow, right? So I was like, yeah. But then I told him, I said, you know what? Screw the ACO 39 million. Let's just assume that they have to pay another 39 million. Let's just be conservative as possible, right? Because it's cold hard cash, right? So you see the thought process. We're just exchanging neural networks together, just getting better. And I'm improving, he's improving, and we're improving together. Okay, I love this. This is some stimulating. This is some stimulating crap, right? I love this stuff, right? I'm a big nerd. Okay, so I love this stuff. Let me drink some of this. Well, I just talk to myself, honestly. I'm just like sharing with you guys kind of the thought processes in my mind. Hopefully you were a part of that conversation. Now you're thinking, right? So okay. So now that we did that, let's go ahead and calculate the intrinsic value. Okay. So let's go here. Show us that CLOV chart out with the 50 DMA. ALH drop out. Why can't? Oh yeah, yes. Sup dudes. Buy all stock trades. Yeah. So speaking about all stock trades, for folks, it makes sense. Excellent. Okay, good. That means what I said was communicated to you all. Thank God. Okay. If it doesn't make sense, ask a question in the live chat and argue about it. Argue. Listen, guys. Listen. It's okay to argue. Okay. It's okay to have opposing opinions and fight to the battle and just fight your opinions and use the chessboard as your facts and attack people's facts, not character. That's not good. Don't attack people's character. Those are ad hominem attacks, and that's really silly. But if you come together and fight with facts, we can come together and really be one of the best, right? So good. For folks that are interested, we are having a flash sale. Take advantage. Coupon code FLASH, $500 off, lifetime access of everything we have. Lifetime access to premium stock terminal, lifetime access to the normal stock terminal we have that has third-party data sources that are free to you for lifetime. Lifetime access to members that are over $44 million in net worth, lifetime access to our educational divisional platform, lifetime access to our research edge and all of the equity analysis that we do from an educational perspective, lifetime access to our deep dives, lifetime access to every little damn thing we offer. I mean, honestly, it's crazy, right? It's crazy value here, okay? Let's see here. And then what's going on here? Delivery skipping my messages. I guess Al doesn't like Elon and Trump. What? I'm. Oh, let me see. What are you saying? If Elon cutting spending, the money market won't be attractive, which will release 7. Absolutely. Bill Clinton was aggressive. Then Doge. He fired. Absolutely. Elon hasn't come close to that, and everyone already going rabid. Legacy. Absolutely. I agree. No. I agree. I'm sorry. I was I honestly, for some reason, I just didn't. I didn't process your comments. I'm sorry. I don't know. Am I missing anyone else's comments? Please comment down below. Right. Oh, what is the old school platform? Oh yeah, the old school platform. Right. Okay. So we did that. Now let's go ahead and let's do the analysis. Okay. So, before we do that, let's go ahead and let's look at the CLOV chart. Okay. So here's the CLOV chart. And ladies and gentlemen, I need to fix this little bug here. There's a little arrow that shows it going from positive to negative free cash flow. This is like a coding thing. I'm going to have to code it and fix it. So that's an easy fix, but there's nothing wrong with it. It's just the arrow needs to be a little lower. Again, I'm like OCD. I don't like it. Right. So here's free cash flow. Here's Clover Health investments. And here's 2024. Ladies and gentlemen, I need you to focus on this. 2020, 2018, 2019, 2020, 2021, 22, 23, 24. All right. So negative 100. Let me know when it goes from negative to positive. 2018, negative 154. 2019, negative 159 million. 2020, negative 2.92 million. 2021, negative 283 million. 2022, negative 208 million. 2023, negative 116.45 million. 2024, 80.89 million. Ladies and gentlemen, this is the first time Clover Health has turned positive on a fiscal year basis for free cash flow. Okay. Now, why is this important? Because if you look at the companies that we talked about from before, this is Tesla. Look at free cash flow. It went from negative, 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 and then now 2019 it went to positive. Then it continued to increase. Okay. Look at, let's say, Enphase. Enphase, it went from negative, 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 positive, then positive, 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 positive. Okay. The point that I'm trying to tell you is that now, and you see how powerful the Alstog Trades terminal is. So now what's happening now is Bloomberg terminals are going to see this, right? And they're like, oh my God, this thing has just turned positive free cash flow. And they just said that and net income is going to be positive in 2026. So I was talking to one of our members, Irish, and he's one of the OG members, and he was saying free cash flow is negative. And I was like, where, right? It's important to back up your information with facts. But it's also important to say, you know what? That was incorrect. I'm sorry, but I believe X, Y, and Z. We want to have a good, thoughtful conversation that goes back and forth, right? And I push the OGs to a high. I wouldn't expect a new member to say these things, but I push the OGs to a higher level because you shouldn't expect anything out of anyone, but I expect a lot out of these folks because these folks have been through hell and they were buying 70 cents, 60 cents, right? I'm a little bit harsher because I built the rapport with them. They understand where I'm standing at. They know where I'm going at. I built the rapport. So for all the lifetime members, when we go at it, understand there's a rapport behind that. So when someone new comes, you got to build rapport, right? You got to build rapport, right? You have to build rapport, right? Because I'm like, whoa, what is this, right? But hopefully we can get to a position where everyone can come together and attack the facts, not the character. Attack facts, not character, right? Back in the day, universities, we used to be able to I'm not talking my time. I'm talking the 70s and 60s. We used to be able to sit in front of the professor and stand up and proclaim our ideas and fight to the battle in what we believed. And we used facts. Now people don't do that because they're afraid of getting canceled. And it's sad because if you keep it all in here, then you're I don't know. It's just, it sucks. I would like to, in our platform, have that university type level where you're able to get out there and speak your facts, right? And you let your facts speak for themselves, right? So that's my vision. I hope that this can come true. It doesn't exist in reality, and it doesn't exist in the most prestigious institutions of our time. It doesn't exist. And you can go talk to Alex Karp from Palantir, and he'll tell you universities are crap now. It is what it is. They just lost their critical thinking skills, right? So, anywho, let me. So here, because you already all have except mine. I knew something. Sometimes like that. I'm sorry. Yeah. No, I get. No, but it's good. So, those were good comments. Those are really good comments. Especially my favorite one was the money market ones, right? Because that's gonna, once interest rates drop and they do those cuts, then that you got $7 trillion where's it gonna go? It's not going to go under the pillow. It's going to go in the stock market, right? And real estate, right? But mostly stocks, I think, right? Potentially small caps there too, and Bitcoin, right? So there's a lot of stuff, right? Bitcoin strategic reserve, all these things, right? I like to wait. I have to snort a gagger before my brain works. Like I don't. What's a gagger? What the hell is that? Is that like what's a gagger? I have to chat GPT this. Like, what does this mean? Right. But yeah, no, my brain is just I mean I have coffee. I have my coffee is very strong. It's like microdose coffee, guys. It's really, very strong. Okay, so now that we went ahead and talked about that, we talked about free cash flow. Now let's go ahead and do the analysis. So we already got, was it 80.89? Okay, there it is. We calculated it yesterday. Yay, we calculated it yesterday, right? 80.89. Okay, good. And I'm just going to put an M, and I'm going to remove the dollar sign because we are a gangster. We don't do that. And I'm going to remove this because we put the M. Got to clean stuff up, right? So then now what I want to do is we're going to take 2020 So we're gonna look at 2025 projections. Okay. But first, we're going to look at 2024. 2024, we're going to keep 80.89. Okay. For 2025, we're going to find the difference of revenue. So to find the difference of revenue, we're going to take the average midpoint of the revenue that they're anticipated to make, which is, we found this here, insurance revenue between 1.8 to 1.87 billion. And they might even they corrected this last time to the upside, so this might even be more, but I'd rather take the midpoint rather than the extreme low or the extreme high. Let's take the middle. So we take the middle, we get this, and then this time, and then I'm going to subtract it from the revenue that we got for 2024, and then I'm going to get this. This is the difference of the amount increase in our revenue that we're going to make because of those increased lives, right? So then I'm going to take this number, and then this time I'm going to take it and I'm going to multiply it by a new free cash flow estimate. Now, we said about 5.9% turns of last year. We took the 80.89 divided by 2024 revenue, and we got 5.9%. So what I'm going to do is I'm going to say, I'm going to take 5.9%, right? 5.9%, and I'm going to multiply it by 70%. So I want 70% of that. 30%, I'm going to assume that we're going to lose because of unprofitable members. So that's going to be the new percentage points. So I'm going to convert that to a percent. We just say 0.0413. Okay. And we get a free cash flow of 19.54 million. And we have the free cash flow from last year. So what we're going to do is we can do total free cash flow, which is 80.89, which was we got from last year, and the new revenue we're going to get, assuming that all the profitable members become profitable, and if not, are better at profitability, and we don't even have an ACO payment. So technically we should add 39 million, but we're just going to keep it conservative here, okay? We're going to add this, and we're going to add the 19.54. And that should give us 100.43 million of free cash flow for 2025. So 2025, next year we should get 2025, and it should be that 100. Now let me go ahead. So now you see how we're working this out together. Like, this is like, I like this. I like working on my hands. Okay. So now that we worked out, and we're doing this live, right? This is not I don't have a teleprompter in front of me, right? I got a camera, and I got a computer screen, and I got a big freaking mic, right? Probably like Peter's, right? All right. So let me drink some coffee. Okay. No, yeah, my brain works. It certainly does. Certainly. Is that the 2X cheese? Oh yeah, I double up on my coffee. Do you think John Cena will win the Elimination Chamber tomorrow and win his last WWE? Dude, WrestleMania, John Cena's still in it? Oh, I gotta watch it, man. I love John Cena. Yeah. I gotta see it. All right. So now that we went ahead and got the FCF, I'm gonna talk to you about some discrepancies. Okay. Personally, I think this is conservative, right? But I like to be extra conservative than not. Why? Because I'm kind of trained to be conservative. Usually healthcare providers, lawyers, they're trained to be very conservative or pilots, conservative, right? Because, you don't want to die, right? So we're going to be even more conservative than this number, right? Which is kind of weird because it's going to be less than the free cash flow of this year, but we're going to calculate them all, and then you be the decider. So there's that. Okay, that's number one. Here, now let me tell you number two. Number two is actually quite interesting. Once we get Q1 of 2025, all these calculations that we're doing I wouldn't say they'll be worthless, but we will get more data to where we will actually get the Q1 results that we're trying to estimate in the next 3 months. And that right there is so powerful, because then, as I said, the more data I get, the more I understand the mechanics of Clover Health, right? And the more accurate the projections will be, right? So once we get Q1, we're going to understand how free cash flow is going to be played out for the year. There are going to be some discrepancies for Q4 because that usually comes at negative, but that's fine, right? We can add those discrepancies and we'll just multiply those by 2. We'll see the ratio jump. This is what we're going to do. We'll see the ratio jump between Q1 of 2024's free cash flow to Q1 of 2025's free cash flow. And we'll see that ratio jump, and we'll just apply that ratio. So let's say it was negative 40 free cash flow for, let's say, Q4. That's fine. I'll just double it. Let's say if it was, if the free cash flow doubled in Q1, I'll just double the negative free cash flow to negative 80. That's fine. I'll do that, right? And it'll be more accurate. You get what I'm trying to say? Okay. All right. So now that we did that, now let's go ahead and do that calculation. Okay. Okay. So what I'm going to do now, I'm just going to, and switchers have medical data, and I think that's going to help them with cost. I'm going to screenshot this. I'm going to put this here so I don't have to go back and forth, because that's kind of annoying for me. Okay. All right, good. Here's the intrinsic value. The cool part about the intrinsic value now is when you hit Clover and you hit enter, it automatically calculates it for you. And because now we have new data, the average free cash flow is 90.26 million and the growth rate is 19.48 million. You see how it's, as the automated intrinsic value gets more data, it becomes more accurate, right? So now it's saying 8, but let's change this for our location. So it's saying now bull case $8, right? So right? So in base case 574 and bear case 431 and recession 2 is 27. But now let's go ahead and utilize the growth rate that they gave us, which is 37%. But this time we'll go ahead and use scenario number 1, which is we're going to go ahead and use the free cash flow of 100.43 million. This is the calculated one, taking a 30% reduction off of the profitable people, right? The new people. So that's 100.43. So we'll put 100. We calculate the price target, and then we go ahead and we get a bull case of $31.06, a base case of $20, and a bear case of $14.99, and a recession case of $6.95. But now what I want to do is let's be even more conservative. Let's remove this 19.54 million, and let's assume that we don't get any free cash flow for the new people. Let's just keep the free cash flow that we got from 80.89. And let's go ahead and get that. Let's put 80.89. We're just keeping the free cash flow for 2024. We'll go ahead and project that. And we get a bull case of $25.02, a base case of $16.82, a bear case of $12.07, and a recession case of $5.60. Now, I'm going to re-put this back, but I just want to add one more thing. So you know how we got 80.89 free cash flow for this year? What was the growth rate on average for this year? It was around 9.33%. So we do 9.33% and we do an updated intrinsic value calculation. Technically, Clover right now, bull case, is $3.50, which is why today it fell down to $3.48, right? And then it recovered. And I think those were institutions because they're looking at the future of Q1, which is 3 months from now. But if you use today's numbers, Clover is $3.50. But the question that I pose to you is, why would you use today's numbers when we physically saw AEP numbers and Clover lives increase? We know their revenue is going to increase. You see, it's different with other companies that they don't have AEP numbers. We got numbers. We got annual enrollment period numbers. So I know that there's going to be more lives. And I know because there's more lives, there'll be more revenue, right? And because of that, I know that I'm comfortable of putting that 37% because I see their guidance, right? And it's at 37%, right? Right. And then, oh yeah, you remember how many people, how many people talk crap about Clover when the revenue went down from 2022 to 2023? The revenue went down and everyone's like, revenue's going down. All the articles, ladies and gentlemen, revenue's going up now. So everyone's going to now get back on their computer. They're going to be like, oh my God, the revenue's going to go up. Watch your mouth. Right. So, so they're going to be doing all of that. Right. So, and this is not including SaaS contracts, right? So now that I talked about that, let's go back and let's put 37%. But this time, what I want to do is I want to be even more conservative. Let's say these new members are very unprofitable members, and we got to take care of them. We got to wait a year, right? But just like, hey, but remember, we also waited a year for 2024 members, and they're going to end up adding to that free casual. But let's just be very bearish. And let's take 89, and let's divide that by 2. Let's take the current free cash flow and let's divide that by 2. We get 40.44. Let's upgrade that to 5, 40.45. So let's be even more bearish. Let's say 40.45. We're assuming that their free cash flow is going to drop next year, which I don't think is going to be the case, but let's update that. We do that. We get a bull case of $12.51, a base case of $8.41, a bear case of $6.04, and a recession case of $2.80. All right. Still, bull case $12, right? So now let's go ahead and let's be even more bearish. Let's take 37% and divide by 2. Let's say they only grow 18.5%. That's profitable. This is very bearish. We got a bull case of $3.41. That's bearish as hell, right? If I was going to cut the revenue by half, which is stupid because we know revenue is not going to grow 18.5%, but let's assume. Let's go ahead now and just use the 80.89 because I think that's pretty good. If we use that with an 18.5% growth rate, we get a bull case of $6.82, a base case of $4.81. And if we take the halfway point, and if we take 6.82 plus 3.62, and we get 10.44, divide that by 2, we get 5.22. So, it's kind of near Craig Holland's price target, right? But this is like really bearish. Like, I don't know why we would do this, right? I'm okay doing this 37% at 80.89. Okay. And I would say I would take, I would, instead of, so with that gives you a bull case of 25, a base case of 16.82, a bear case of 12, and a recession case of $5.60. So what I would do, because I'm bearish, I'm going to take the bear case in the recession, right? I'm going to take these two and I'm going to add them, okay? And I'm going to divide by 2, and that's going to be my price target. 12.07. 5.60. So as of now, for the foreseeable future, my price target for Clover Health is $8.83. And if you go back to if you go back to media, and I have to go all the way down here. Let's see if I can find it. Hey, shout out. Nice water. Oh boy. Let me see. Give me a moment. Let me just scroll down. If we go back here, scrolling down. So I posted this. When did I post this? I posted this back in December 7, 2023. More than a year ago. $8 and I don't know, was that 65 cents? What does this say? Look at that. Maybe $8.85. I have to look. I have the better image, but that's $8. So there it is. So my price target, I'm going to wave my magic wand. Okay. My price target for Clover Health by the end of this year should be anywhere between $5.60 to $12, with a median price target of $8.83, or we'll call it $8.84. Okay. So I'm going to say it again. Okay. Again, I'm not a stockbroker. I'm not a financial advisor. I take what I say as a grain of salt. Okay. Last year, my price target was around $2 to $3 because of the low, because of them three-star ratings, and then upgraded to 3.5. Then they got upgraded again to 4 for payment year 2026. This year, my price target is anywhere between $5.60 to a bear case of $12.07, with a median price target of $8.84, with the potential to reach $25. Okay. Now, why do I say this potential? Well, because this does not include SaaS. This does not include SaaS. Okay. Also, Andrew Toy and Vivek, they get money if it hits 25 and above for, I think, 90 consecutive days. So again, my price target is anywhere between $5.60 to a bear case of $12.07, with a median price target of $8.84, with the potential to rise to $25. This does not include SaaS, and I assume SaaS news will push it up. Now, the beautiful part is a lot of retail investors were upset that there were no SaaS news. Okay. A lot of them were upset that there were no SaaS news. And that's okay. That's okay because it's okay because they're not looking at the full picture, right? Their insurance revenue is becoming profitable, and just the insurance by itself is going to be great. SaaS is going to be even like a little cherry on top, right? So I think the SaaS is going to go ahead and accelerate that price target to that bull case, right? So I think that's been really good. There it is, right? So let me go ahead and yeah, is burning money in the campfire pretty much, right? Exactly. On the next we ask. Yeah, I don't think they're going to give it to us until maybe Q3 or Q4. We'll see. Maybe even Q1 of 2026. I'm just, set your expectations, right? Because I said I'm not expecting any SaaS, right? They'll let us know, I assume, right? Yeah, I like them a lot, and I hope the projections make sense, right? I broke it down. I'm trying to think. Oh, so then now let's go ahead and let's just look at this. So now we did this. Let's go ahead. We did this. So now let's go ahead and look at analysts' estimate. So these are slowly gonna get updated soon, but profitability wise, they're expecting to be profitable here. But it's funny because we get a positive signal cross right there. We got a positive signal cross. So they know. So 2026, this stock is going to explode. But even then, if you go to quarterly, and if we go here and we really look at it and dissect it, we actually get a positive signal cross here on Q1 of 2025. And even then, the revenue, I think, is going to be a lot higher than what they're basically prescribing to. I think the revenue is going to be a lot higher than this. But you can see they're anticipating a positive cross. And you could go ahead and look at what a negative cross did and see what happened to the stock price. This is a positive cross. And what this basically means is these revenues now are slowly going to start trickling back up, and you're going to start seeing the price go up. And I know it's like hard. They're like it's hard to believe. But if you don't remember, about 8 months ago, the stock price was 60 cents. So stuff happens, right? So it's just, I like to follow math. I don't follow emotion, right? Again, this is market sentiment intelligence. Here it is for Palantir. This will be soon released to lifetime access members. If we run the analysis, smart money became bearish here. Stock price fell down to 6. Smart money became bullish here. Stock price went all the way from 15 all the way up to near $100 plus. Obviously now it's fell back down, but you can see what smart money has done, right? Smart money, we got that signal, and then 1, 2, 3, 4, 5, 6 quarters out, the stock price 10x'd. So we got the signal, and then 6 quarters out, 1, 2, 3, 4, 5, 6, the stock price 10x'd. Now, if you look at Clover, when did we get the signal for Clover? Well, for Clover, we actually got the signal here. So 6 more quarters out, I expect hopefully the stock price should start to 10x. So you could see the signal and the power of smart money and dumb money, which is why when this will be released to our lifetime, it'll be released soon. You're going to start to realize why the lifetime access bundle is going to end up being $15,000 to $25,000. And for institutions, it's going to be anywhere between $85,000 to $125,000, right? Lifetime, right? You could start to see that, and you're starting to see how clean the data is. It's a very Apple-like, clean-like fashion that helps you really have a GPS when you have storms of tariffs, all these bear traps, you'll be able to ride it out because you know where we're going, right? So I hope you like this. In the next 6 quarters, I'm really bullish because we just got the signal. Okay, we got the head nod. We got the head nod from Wall Street, or the head, which was not supposed to be given to you, but I went ahead and democratized it to you. All right, so QuantFlow, we can go ahead and look at QuantFlow. So we are. Let's go ahead and clean this up. So it looks like we're finally out of hell. So stock price recovered, and we're finally over the blue line. This is the Al Stock Trades proprietary QuantFlow. So we're finally out of hell here. But let's look at the monthly. So we're still under the blue line, which means we're in hell. We're in hell right now. There's a lot of selling pressure. So we need to wait until this thing basically trickles up, and once we get that trickling up point, then we can, climb our way out of hell, right? 3 months, you see we're trickling downwards, but we can analyze the trickle down. We could kind of see, we have to look at the 6 months here. We can just kind of, let's clean up all this data. So we can see that we're maybe basing here, and basing here. So we can watch this, and this comes in cycles. You can see, we can graph the cycles here and figure it out. We're watching this to flip to the positive side, and I think that's going to happen 6 quarters out. You see how the data integrates together, and you could see now that we started getting the green is the buying pressure, but now we're getting some heavy selling pressure up here. We can go ahead and kind of zoom in here real quick and just kind of, we could see, we have some buying pressure up here, the blue, but a lot of this is selling pressure. And that's a lot of the market dynamics, which is what I'm about to discuss right now. Okay. So I'm monitoring this, and we could go ahead and do the analysis here. Let's remove this. So this is kind of going up and down. So maybe potentially, maybe a little lower, where the RSI is definitely going down. So that'll be protective. So we'll see. The market wise, in terms of market dynamics, we're starting to see slowly a rebound on Amazon, some consolidation. We're starting to see some consolidation with Google. You're starting to see there's a support line here for Google. The momentum indicator, if you look at the day, we're trying to bounce off of that 50 DMA, right? So we're waiting on this, right? Palantir, we broke out, and we're trying to basically fight that 50 DMA. But now let's interestingly watch for Clover. Let's look at the hour. So we're in our, well, first off, we're in our green box support buy zone, and it basically just bounced off of our purple line. So we got a nice bounce off of that. So let's zoom out a little bit, and you can see here we are getting an RSI recovery now. This could be the stabilizing factor. Let's go ahead and do this. And this hit, we're literally right in our buy zone area, right? You see how I said a couple days ago, I said anywhere between $3.50 to $4, and we're actually getting that. We're actually getting that now. So you can see the power. And this is, I released this all to our research edge, so people can see kind of how I look at it, right? We're still haven't gotten this MACD signal reversal. We are approaching a RSI support line here, so we could be getting a support on the upside. But also maybe potentially, maybe we just need to get dragged down to an RSI of oversold, and then we can basically track back up again. So there's still not a recovery yet. We're starting to formulate one, but I'm not calling it a recovery yet. Right? So there's that. What else? We talked about this. We're gonna talk about the quantum charts right now. Oh, sentiment analysis. If you go ahead and search sentiment for Clover, sentiment for Clover. Interestingly, we got some negative sentiment here. I'm actually curious to see what that was. This was on the 27th. Earnings beat estimates. That's positive. It analyzes the transcripts, and it uses the transcripts to formulate its investment machine learning analysis. Again, this is proprietary to us. And again, you get lifetime access to it for the lifetime access bundle. I'm trying to see anything bearish here. There's some net loss. These are all like bearish, drag the price, investor confidence. Oh, conference. Sorry. So let's go ahead and let's zoom in. So you can see here that we are trickled down on the 27th to being negative, and the stock price fell. Right now, let me show you how accurate this is. Let's go a year out. We're analyzing the articles a year out, and you can see this is. Let me show you. Let's zoom in here. Oh, I can't. So let me just take a little screenshot so I can show you this dip. You see this dip? You see that dip? Let me zoom in. That dip happened on April and May of 2024. So what was the stock price when it dipped this low? April and May of 2024. April and May right here, the stock price was around 64 cents. So what I'm trying to show you is we dipped here. We dipped, and now we're slowly recovering on the sentiment from our analysis, which means we may get a rise soon. We may get a rise, right? Historically, what ends up happening is the stock prices rise, and then retail investors they get drunk off of their own Kool-Aid, right? They anticipate more than what it is, and they may freak out and they may sell, and they become bearish, right? But then after a few months, the sentiment changes. So these are all buying opportunities, right? So if we go ahead and run the analysis, right? Mildly bullish. So we're in the bullish territory. Okay. I'm curious to see what Palantir looks like. You can search any stock you want. Let's look at a week. So again, you see how Palantir was negative, and then now it's running positive. So we're pretty much tracking back online. We'll see. We can run it here. It was really negative here. It started getting negative in February 20. So I'm curious to see what does February 20 look like for Palantir. February 20 was. You see how accurate this is. Watch. So you just so you can see that what I'm trying to democratize for the retail investor community. I'm trying to show you how powerful this is, and you have it for lifetime, which is why this is going to be anywhere between 15 to 25K. Right? It's going to be this is expensive to run, because you have to understand we're searching 362 articles, and it runs through all of our analysis. I want you to zoom in here real quick. This is for Palantir. Okay. I want you to look at this. So on February 20, we became negative. right? So here's February 20, right around here, we became negative. It was at $106.27. Our sentiment analysis machine learning technology said it's negative. And then from that, the stock price dropped 20%, 20.1%, right? So are you seeing the pattern here? I hope, right? So, okay. So let me know if you are, right? Because, we can also do a progression analysis for Clover. It's another way of calculating intrinsic value, or from a price to sales perspective. This is an incorrect CAGR. We want to use 37%. We do that, and initial revenue in millions. This is their revenue now initially, right? We'll use that, and price to sales, and then based off of this perspective, we should be getting Clover at this should be if Clover just operates as a price to sales of 1 and just uses that, then this should be the price of Clover over time. So $4.45 a year out. So you can see that we're going to be, if this is the case, and the market sees it as price to sales of this, we know that Clover is a SaaS company. We know that they're able to get more free cash flow than the incumbents on average. And it's in its earlier phases, so it probably demands a higher price of sales than, let's say, a more incumbent company. Interestingly, Alignment Healthcare, even with all of its glory, it's actually at a price to sales ratio of 1.72. So if you use Clove, go back to Clove again and do 37% and do 1.72 and price it to that of Alignment Healthcare's price of sales, you get, $5.88, $8, $11, all the way up to $1.37. $137. But let's just be conservative and let's just do price sales of 1, or was it 0.98? Be a little bit more accurate. So you could say, $4.59. Then next year, it'll be like, so like, let's say this year, $3.35. Next year, $4.59. Next year, $6.29. Next year, $8.62. And then in the long term, in the next 10 years, if they grow at this rate with a just being an insurance company, then you're going to ultimately get to $78. The reason why retail investors are upset is because of this strategic fact that, it's just going to be a price to sales for 1 forever. That means I have to wait 10 years to get that much money to get the $70, rather than it being a SaaS, and then I'm able to get that money faster. Get it? So, but what they're misinterpreting is you could do an intrinsic value calculation, which is what we did, and then stocks end up going to that, right? Which that's the missing piece of the puzzle. But this is exactly what Craig Hollum and they're all doing. This is what they're doing, right? They're probably doing a maybe price to sales ratio 1.5, and here's your Craig's price target there, or maybe they're just using the same one from Alignment Healthcare, and there's your price target there, right? So, but I do things differently, and you could see kind of the the situation there, and how stocks go to their intrinsic value a lot more faster than normal, because at the end of the day, this calculation does not take into account free cash flow, right? Okay. So now that we did this, we looked at smart money 6 quarters out. We're going to go to the moon. We did the analyst estimates, again, all part of the All Stock Trades platform. We looked at, for the first time, a free cash flow is positive, 80.89 million from negative to positive free cash flow. Now let's go ahead and take a look at Clover on the quantum chart. So here's Clover on the quantum chart. Here's the analyst price targets right now. As you can see, it's $6. They're going to go ahead and update the other ones, and it was the other ones should basically come into play. We'll do support and resistance. So you can see right now, 367 is becoming a nice little support line here. We can go ahead and add a Fibonacci, 362. We can go ahead and do the hour. Same thing here, 320, from here, and then here's here's 472. So again, we're trying to get that. We almost got a double bottom here on the minute. Got almost like a double bottoming pattern here. So this could potentially be a level of support to get us past. So now the new level of resistance now will be $4, and we'll see if we're able to compound chicken that, right? Look at the daily. Here's the daily. Here's a support. This needs to be give this a week. This will update, and this will show. Here's the weekly, right? So $3 is a strong level of support there. So if you really want to be bearish, you can do that. But ultimately, if we run an advanced technical analysis for everything right now, this is interesting. For Clover, we're actually on the minute, we're actually on an uptrend. The hourly, we're actually on a downtrend. For total bullish points, we're actually a 4, and bearish points, we're actually a 1. So we're actually pretty bearish right now for Clover, bullish for Clover, even though the price is like not what you expect. It's actually pretty bullish. And this is why our platform is really great, because there is no emotions to your investing. You run it through here, you interpret and analyze the data, and you interpret and analyze the data, and you get to a point where there's no emotions here. People that are emotional sell, and we buy from them, and we make money, right? That's pretty much what it is. All right, so then there's that. Let's go and do a Monte Carlo projection for all sequences, right? All part of the All Stock Trades platform. We got a bull case on the minute, 413, a bull case on the hour, 472, a bull case on the daily, 743, bull case on the weekly, 958, and all times 7. So there's that. Let's go ahead now and do institutional ownership. And there it is for the ownerships. Let's go ahead and score it. Again, all part of the lifetime access. I mean, look at everything you guys get here, right? So we have an institutional ownership scoring system. It scores it, and it gives you a bullish score of 6 and a bear score of 3. And overall score is bullish. So institutions are bullish, right? So we've gotten the head nod, right? And this is pretty good. And strategically, you're technically now inside of a Bloomberg terminal, even though this is not a Bloomberg terminal. This is the All Stock Trades terminal. But now you're inside of Wall Street, right? So you have become part of the 1%. And what we're doing is we're breaking down the walls that separate Wall Street from Main Street, and we're having them mixed together. And this is really called full democratization of data, right? And I hope now you're starting to see it. So now we have this, and we have this beautiful platform. We went ahead and talked about all of these things in this video today, didn't we? And what I do want to do right now is I want to talk to you about some research. Okay. So now let's go ahead and talk about the market right now. Okay. So the market right now is nearing a bottom. I'm reading my notes right now. So the market's nearing a bottom with its recent decline in U.S. equities for the past 2 weeks. The beautiful part is Clover now is basically working its way within the stock market. Before, it was not working because it was classified as a meme stock. Now it's a lot more predictable on me, because now all of the indicators that we use can now be applied for Clover, because like I told you, Clover now is intrinsically value responsive, which means that it responds to its most recent free cash flow and growth rate. So as soon as Q1 hits and they get a new growth rate and free cash flow, instantaneously the market will bring it to its value on average. We'll see, depending if there's no recession, bear market, war, God have you, what happens, right? Momentum actually remains intact despite the market downturn, which is actually bullish. Selling pressure is actually easing. Several large caps are actually finding their near support. Treasuries and dollar is weakening. So there's been a decline in treasury yields, and the US dollar, it usually is helps with risk on momentum plays. Now, if you go to the 10-year federal note or the US 10-year treasury, and if you look at the past 6 months, or this, you could see that we've been actually going down, right? If you go to year to date, we used to be at 4.78%, right? Now we're at 4.22%. So what that basically tells me is that the market is pricing in that we're going to get rate cuts, right? The market is slowly pricing this in. And this is actually pretty bullish, right? The market is telling you right now, again, listen, the bond market is larger than the stock market. And the bond market can really help you see what's going on in the stock market. Most people look at the stock market. Smart people, smart money, look at the bond market as well. These are two fundamental concepts that are important, right? Right. So there's that. What else? Oh, so if you look at the A22 bull score, remember I showed it to you. You remember? We're at a level we haven't seen in 2022. And you have to ask yourself, is this accurate? Are we really in a bear market now? Earnings are pretty good, right? I would say. So I think that's a misprice. And I think usually heightened fear stemming from trade concerns like tariffs could paradoxically signal a market rebound, as extreme pessimism often precedes turnarounds. Remember, you want to buy when others are fearful, and you want to be greedy when others are fearful, and you want to be fearful when others are greedy. Right now, people are fearful, which makes people like us, smart money, the people that are actually profitable in Wall Street, people that actually make money, we're actually hungry right now. Okay. All right. So encouraging signs for March. We have a technical uptrend that's intact with no significant breakdowns. We have actually a opposite bull signal because so it's like a contrarian bull signal where investor sentiment of both retail and institutions remains cautious, but that's actually, that's good. That's good. Okay. In terms of the Elliott wave analysis, which is a technical analysis tool, we're actually finally in that final leg down phase before we rise to the top, I think, right? That's where I'm looking at right now, right? We have the tech sector stabilizing and, like I said, falling yields, right? Major stocks like Meta, Nvidia, Amazon, Google, Palantir, Microsoft, they're all coming down and trading to a support. I would exclude Palantir and just focus on large caps. But here's the bad part. So right now, let me look at the most recent S&P 500, right? It's $5,954 for the S&P. So $59.54. The thing is, if we break around 5,800 or like 5,830, if we break that, we're breaking a support for the S&P, which means that we're going to track down lower. So watch that, right? Because if it breaks, expect more pain, right? And if you look at the QQQ, it's holding at about approximately 500. If it breaks that, then we're going to go to 480 to 487. And if that happens, expect more pain. So I'm watching those things and I'm showing you so you guys can watch it too, right? But overall momentum is still in play. We're having a cup and handle pattern being formed. So everything is great. It remains constructive. The market is likely nearing a bottom, but we need further confirmation to show that it is. We still haven't, especially for Clover, gotten that MACD signal and that RSI reversal yet. So we're still there, right? We still need more data, right? But ultimately, we are seeing all the appropriate diagnostic symptoms of what a bottoming out process looks like. Okay. Now again, if you like this information and if you like the data that we used, you can have this data right now and you can run intrinsic value calculations on any stock you want. Our platform will be increasing in prices soon. It's very expensive. These flash sales are going to look like a thing of the past, right? They're going to be like, wow, $2,500 was very cheap. And unfortunately, it's going to get to a point where it's going to be inaccessible for a lot of people, right? But the problem is this is too expensive. So for folks that are interested in everything we have to offer, and we offer a lot. When I say over 2.5 billion outputs of institutionally graded data, I mean over 2.5 billion outputs. That's a lot. And it's organized in such a way that will allow you to go from zero to hero. And I believe and I put my name on this platform. And this platform using this information has changed my life. And it's changed the lives of many people that are using it right now. Right? So there it is. Let's go ahead and read comments real quick. You're going to make me cry. No judgment. You're my hero. I love you, brother. Excited to see where CLOV is in 2028. It's double digits. Hell yeah. I'm semi-retiring at 40. Remember, to retire is to expire. You got to have something to work for, right? This is better than a bar, right? Screw a bar. A bar is, right? Eel food. It's nah. Let's see here. So the economy is not doing good and interest rates dropping to help create new investments. I mean, that sounds like good right there. I'm starving, right? Me too. I'm hungry, actually, both for stocks and for food. Can you run this through Trump's? Yeah, guys, that was crazy, man. If you don't, I'm gonna talk politics for a sec. The last time I saw the Oval Office this crazy was when Nancy Pelosi, Chuck Schumer, and Trump were arguing with a government shutdown. Remember that video? It kind of reminded me of that. And this happened twice. So that makes me believe that this was planned. And Trump knows how to he knows how to go viral. Yeah, man, I don't know. It's crazy, right? So there it is, guys. This was a very comprehensive video. Just to reiterate, my price target for Clover Health in the next 12 to 24 months, and we will be revising this upwards as we get more data in Q1. But my 12 to 24 month price target is anywhere between $5.60 to $12.07, with a median price target of $8.84. Ladies and gentlemen, it's always a privilege and honor to serve the retail community space. I love you all, and I'll see you on the next one.